Hi guys, it's Stock Harry, and I'm going to explain what happened with Amazon earnings, why it rose 13% and then turned around and sold off, ending down 2%. I'm also going to talk about what's going on in the economy, so let's get into it. So earnings were just reported from Amazon, Intel, Cloudflare, and a number of others. And this comes just days after Microsoft, Alphabet, Meta, and a number of other companies had incredible earnings beats. We saw the stock market absolutely rally on Thursday after earnings beats from the mega cap companies. And a lot of people looked at what happened Thursday. They looked at what happened with all of the earnings beats from the mega cap companies, and they started to think, wow, we must definitely be headed for a major bull run. But what's really interesting is even after today's 2% rise in the market, believe it or not, the market's only up 0.6% for the month of April. That's right, 0.6%. And April is supposed to be one of the best months of the year for the stock market. So today's rally looks really bullish, but once you zoom out and look at the whole month of April, we've been trading flat. So it's not really bullish or bearish. It's just neutral. Next week, though, I think we're going to get some very clear direction on which way this market goes. I'll explain why a little bit later. First, let's go over some of these earnings, because, man, they were wild. Let's get things started with Amazon and talk about why it rose 13% after hours, only to turn around and sell off. And, well, as of the recording of this video, it was down 2%. So here's what happened. When Amazon reported earnings, they reported a major earnings beat. And this is essentially what we've been seeing from all of these tech stocks over the past few days, is that they've been beating earnings expectations. And not only have they been beating earnings expectations, they've been posting their best quarter on earnings in over a year. And this is great because as the economy slowed down, as inflation went up, as labor costs went up, a lot of these companies were struggling to make money. So the fact that Alphabet and Microsoft and Meta and Amazon all reported one of their best quarters in over a year shows that things are turning around. They are getting better. And that makes sense. That's why Amazon stock jumped 13% after they reported earnings, because it was a pretty big earnings beat. But then why did it fall and give up all of those gains? So many people were celebrating their call options, and I saw a lot of tweets get deleted. So essentially what happened was Amazon has two main areas where they get their revenue and earnings. One is Amazon.com, where you have all the retail shopping. Now, that has been struggling for the past year due to high inflation as consumers shift away from spending on goods and they spend more towards services, as well as just buying groceries. That side of the business has been struggling. But where a lot of the hope was coming was from their AWS, their cloud services. And after Microsoft reported their first profit ever on their Azure platform, a lot of people thought, okay, great. Amazon is going to do well in AWS. But when the conference call started and the CFO started speaking, he said that AWS growth was decelerating. Uh-oh. So not only do we have the retail side of the business going down, we now have their cloud side of the business going down as well. That's two of Amazon's main businesses decelerating in growth. That's not good. And that's why the stock dropped and gave up all of its gains. And this leads me to the next thing I kind of wanted to talk about, is that just because a company beats earnings expectations does not mean that a company had good earnings. Don't forget that Amazon laid off 74,000 workers in order to get their costs down and their earnings up. And when it came to Intel, well, Intel was another very volatile stock on the day because Intel also beat earnings expectations, but they also reported weak Q2 guidance. And Intel stock initially rose after hours, but then people started digging into the numbers and we found out that Intel, well, they just reported their worst quarter of earnings in the company's history. So they beat earnings expectations, but it was the worst quarter in the company's history. You see, just because a company beats extremely low expectations does not mean that the earnings were good. And after people started digging into Intel's earnings, that stock gave up all of its gains. It ended up going down about 2% after hours. But luckily, Intel was able to save themselves on their conference call by mentioning the word AI a lot. We saw Meta, Alphabet, Microsoft, all of them mention the word AI more than 60 times on their conference calls, causing massive stock market rallies in those stocks. And Intel, they went with the same playbook. Just ignore the fact that we had our worst quarter in history. We mentioned the word AI, so buy our stock. As it now stands, Intel was the only stock that reported earnings that was up after hours of the major 6 that reported. T-Mobile was down 2.63% as of the recording of this video. Cloudflare was down 24% as of the recording of this video. Snapchat down 17%. Pinterest down 13%. And as I mentioned earlier, Amazon down 2% also. So while it seems like earnings may have been great after some of the mega caps reported, the fact is, out of the 6 big companies that reported on Thursday, only one of their shares rose. The other 5, they all fell. And this is kind of the point I wanted to make, is that Tesla also fell, but oh, how quickly we have forgotten after just 3 days of positive earnings from mega cap stocks. Of course, the real one that's really going to move the market is going to be Apple, and they don't report until next week. As well as the retail stocks, which also don't report yet. Keep in mind, we still have 3 weeks of earnings ahead of us. We're only about a week into this. We have a lot of movement coming up. And that's why, despite today's massive bullishness in the stock market, the S&P is only up 0.6% for the month of April. Now, we've also got to talk about what's going on in the economy, because we did get some pretty big economic data coming out today. Before I show you the big economic news that came out on Thursday, I want to start with some good news. And the good news is inflation in foods is starting to come down. In fact, wholesale egg prices may soon drop to $1 for the first time in almost 2 years. Wholesale egg prices were at $1.22 a dozen on April 26th, down from a record $5.46 in December. As inflation, especially in goods, starts to come down, this is a good thing because it means the Fed might start pausing soon. Unfortunately, the Fed is still expected to do a 25 basis point rate hike at their next meeting, and some of that has to do with the major economic news that came out on Thursday. The GDP report shows that economic growth slowed in the first quarter to an annual rate of 1.1%. And many economists expect the economy to slow even more as the year progresses, with the possibility of a U.S. recession in the second half of the year as higher interest rates affect the economy. So if higher interest rates are causing the economy to slow and possibly put us into a recession by the end of the year, why does the market believe the Fed is going to raise interest rates by another 25 basis points at their meeting next week? Well, the reason is because the economic data that we have so far shows that the economy is still strong. In fact, one of the main reasons why the GDP was as low as it was really because of the inflation adjustment, not so much the fact that things are actually all that bad. In fact, the inflation adjustment caused our imports and exports to come up quite weak, but consumer spending, it rose 3.6%. And it was really that consumer spending that spooks the Fed, because the Fed has to get consumer spending down in order to get inflation down. And that is why the Federal Reserve is expected to continue to raise interest rates at least one more time before they pause, despite the fact that those higher interest rates are probably going to put us into a recession. And while a lot of people point to the labor market being strong as one of the reasons why we might not enter a recession, a lot of signs point to that strong labor market weakening rapidly. News came out that Gap was going to conduct layoffs, cutting 1,800 corporate jobs, while Vice Media Company cuts their staff and ends Vice News Tonight. Also announced today, Dropbox is laying off 16% of their workforce. But don't worry, it's okay. Don't sell the stock, because Dropbox says they're going to put a push on AI. According to Dropbox, they have to do job cuts because the economy is slowing down and their business is slowing down. But they claim that they're going to make a big push into AI, and they're going to use the people they're keeping to develop AI. Generally, if you want to develop AI, you have to hire people. So the fact that they're laying people off in order to build out AI makes no sense whatsoever. Sounds like the company's just trying to save face here, because we all know that if you say the word AI enough times, your stock price goes up. And rounding off the layoff announcements on Thursday, Lyft says it's going to cut an additional 1,000 people. That's going to affect about 26% of their remaining employees. Now that you understand that layoffs are continuing and the labor market continues to weaken, we have to talk about the more recent, urgent fear that is going to cripple the stock market if this actually plays out. And that is the imminent collapse of First Republic Bank, ticker FRC. Unfortunately, no buyer has emerged for First Republic Bank, and that's because buying the bank would actually cost significantly more than what the bank is actually worth. If another bank bought First Republic to save it for just one single dollar, it could still end up costing the buyer tens of billions of dollars. That's because if another bank buys First Republic, they have to immediately mark down the value of the assets. And in doing so, they would have to inject additional liquidity into their bank, which means they would have to sell their own assets, which are losing money. And that would just put them in an even worse position. So nobody can buy First Republic Bank. Luckily, First Republic Bank does not have to sell itself, because they can work through their crisis over time just by waiting for their bonds and loans to mature or repay in full. The problem is, First Republic Bank might not have the luxury of waiting, and that's because the commercial loan crisis is right around the corner. The fair value of First Republic's real estate secured loans was about $19 billion below their carrying value, meaning that if First Republic Bank were to hold all of their loans to maturity, they would be perfectly fine. But if, for whatever reason, people stop paying on their commercial debt, First Republic could be realizing a loss of $19 billion this year alone. And that could be enough to wipe it out. And that's the big fear, is that First Republic is going to collapse if the commercial loan crisis gets any worse than it currently is. So what's going on with the commercial loan crisis? Well, the big problem is that after the pandemic, people stopped going to the office. Everybody started working from home. And this left a lot of office real estate quite empty, with many office buildings as much as 75% vacant. And nobody is really sure just how much these office buildings are worth. All we really know is that they're worth significantly less. But how much less? Well, the good news is, if you can call it good news, we're about to find out just how much these office buildings are going to have to be discounted if they're going to sell, which means we're also going to get a repricing on how much losses the banks actually hold. A $300 million San Francisco office tower at 350 California Street is going on a fire sale. It is mostly empty, but it's now open to offers. It was worth $300 million 4 years ago, but now it might sell for 80% less. The problem for banks is that about $80 billion worth of loans backed by U.S. office buildings come due this year, and most will need to be refinanced at a time of higher interest rates and lower occupancy, which is going to threaten lenders with losses if those loans go into default. And those loans are expected to go into default. Wells Fargo recently said that the volume of its office building-backed loans that it expects to go into default jumped to 725 million in Q1 from 186 million in the quarter prior. That's a 300% increase in the amount of defaults on commercial loans that Wells Fargo expects. And that is going to put a significant hit on their bottom line. But more importantly, it's going to seriously hurt the regional banks who simply cannot afford for their loans to go into default after they already saw massive deposit outflows earlier. And this is why a lot of people think there are a lot more banks that are going to collapse. And it's also why the Federal Reserve themselves are expecting more bank collapses, which will eventually lead to a recession. So even though Thursday was extremely bullish, it's only one day. And once you zoom out, you realize that one of the best months of the year for the stock market is only up 0.6%, meaning it might have looked good today, but it's not looking that great long term. So be careful, stay on guard, and don't be fooled by 3 or 4 mega cap companies that beat earnings. Look at the bigger picture. Now, despite the stock market trading fairly flat over the past month, our coach in our We Profit Day and Night coaching program has made over $40,000 in the past 2 months. And I want to help you make this kind of money in your portfolio also. So to help you out with that, what I'm going to do is I'm going to give you 20% off of the May Mastermind. The May Mastermind is going to be led by this coach who made over $40,000 in the past 2 months. And she has a very small, intimate group of people that she works with on a monthly basis. I want to invite you to join her in that group to learn how to make this kind of money in your portfolio. Now, there's only 6 slots left for the May Mastermind. And if you want to be one of those 6 people that gets in, I'm going to give you 20% off of the May Mastermind, but you have to sign up by the end of this month. So schedule a call with my onboarding specialist at weprofitdayandnight.com. That's weprofitdayandnight.com. Tell him that Stock Curry said you could get 20% off of the May Mastermind if you sign up by the end of the month, and get in there and learn how to make massive profits even when the stock market trades flat. And if you got a lot out of this video, then be a good friend and share this video with your friends and family so that they can understand what's going on in the stock market and the economy as well. And don't forget to hit the like button and subscribe. And if you missed the live stream I did yesterday where I analyzed quite a few stocks that people asked for, make sure you watch the live stream that I did yesterday right here.